Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, September 13th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, what's the latest with U.S. fiscal policy? And will Beijing step up to counter the liquidity drain from Tokyo? Our answers are, yesterday afternoon, the U.S. Treasury Department reported its monthly federal budget statement, and the results warrant us scrapping our Janet One softer inflation theme. The latest data indicate the U.S. government is back to aggressively implementing Biden's populist industrial policy and strongly supporting Vice President Kamala Harris's presidential election bid in the process. These are exactly the kind of stealth data points that investor consensus is too busy consuming bear porn to notice. We reiterate our call for U.S. growth to slow over the medium term, while generally surprising consensus expectations to the upside throughout. China's August credit data were marginally supportive of our China eases, Japan displeases theme. China's liquidity impulse has slowed in recent months, but is still positive. We expect Beijing to implement favorable macro-prudential policies aimed at ameliorating the disaster that is the current state of the Chinese property market in the coming months. That would unlock animal spirits in China and get the private sector back to generating liquidity as well, at least on a transitory basis. As always, transitioning to our 42 macro dashboard here, wrapping up with a question from our community. This one's regarding developed market economy recession versus emerging market economy recession. So it's a pretty long question, so let me just read it real quick. It says, "Good day, Skipper. I appreciate your analysis and believe that you have built the best mousetrap out there. Thank you, sir. Appreciate you. I'm very happy with the service you provide. Appreciate that. I do take in macro analysis of others and quite often wonder what your opinion would be of their assessments. For instance, I've recently heard one take that I found quite plausible. Due to the degree of physical dominance and debt in the U.S. economy operates under, our economy is acting more like an emerging market economy and less like a developed market economy. Because of this condition, their analysis states that we are possibly already in emerging market recession, perhaps late stage. Would you give this view any credence? If so, maybe going forward, we also need to bring into our awareness the characteristics of emerging market recessions and how they differ from developed market recessions and that the U.S. has experienced. Perhaps a developed / emerging market recession analysis is needed. I don't have a great understanding as to how the two types differ. So a lot to unpack in that question. Phenomenal question. Again, thanks for the compliment. We really appreciate you, appreciate all of our clients and friends in our community here on a daily basis. So with respect to the emerging market economy, so recession. So generally speaking, emerging market recession is characterized by the following dynamics. It's usually because emerging markets have, most emerging markets, not most, but the emerging markets that have quote unquote emerging market recessions have these types of dynamics. They typically have capital count deficits, and as a function of that capital count, they have capital count surpluses and current account deficits, and as a function of that capital count surplus, when those funds start to repatriate out of those economies, ultimately it means that the central banks can't ease policy as much as they probably should in order to protect the economy due to fears of destabilizing capital outflows, of which you could destabilize the currency. And if you destabilize the currency, then you're talking about a sharp increase in debt service ratios, and you're talking about a potentially a stagflationary outcome with respect to how the currency influences import prices. And so that's the traditional emerging market recession dynamic. You can make the case that the U.S. is sort of experiencing some of that already, but that's always been the case because, again, the U.S. is a current account deficit economy with a massive capital account imbalance, rather, and one of the largest imbalances we've ever seen as a share of GDP. I want to say the U.S.'s net international investment deficit is somewhere around 75-ish% of GDP. I mean, it's insane. It doubled in the last 5 years alone. So you could see if the U.S. growth were to slow well beyond the expectations of the general investor consensus, and more importantly, the investors that have all those unrealized gains on their balance sheets, then you could easily have a situation where capital outflows are really weighing on the dollar in a more material way that ultimately it influences import prices in a way that it causes a higher and sticky inflation and a stagflationary outcome. I mean, we've seen this occur many times in the U.S. economy. This happened in 2008. This happened in obviously throughout the 70s. It's happened in the 40s as well. So this is not something that's new to the U.S. economy. And so I don't think it's necessary to sort of amend how we at 42 Macro are thinking about the U.S. economy or analyze the U.S. economy. And quite frankly, we've had the best research call on the U.S. economy in the world over the past 2 years. in the world. Check check the stats on that. And so, quite frankly, I'm not of the view that we 42 macro need to change anything. If anything, it's all the bear porn jockeys out there that need to change whatever the hell it is that they are doing that missed this massive run up in U.S. growth over the past 2 years since we authored our resilient U.S. economy theme back in September of 2022. So we'll wrap it up there. Darius Dale presenting our macro minute for Friday, September 13th, 2024. I just want to say best of luck out there. Everyone have a wonderful day and have some fun watching some football this weekend. We'll catch you back here on Monday. Cheers.